A lot of NRIs, including our viewers, wanted to know the updated rate of TDS for NRIs on sale of property post-budget 2024. By the end of this video, not only will you know the updated rates of TDS, but also what are the consequences of the same on NRIs selling their property in India. So let's get started. So how does this TDS on sale of property actually work? Now, when a person purchases immovable property from an NRI in India, he or she is liable to deduct TDS on the entire sale consideration. For example, if you purchased a property for 20 lakhs and sold it for 1 crore, the government will charge you TDS on the entire sale amount, which is 1 crore, and not on the gains. In case for resident Indians, the same amount is only 1%. I know it's a bit unfair, but then laws are laws. All property transactions, irrespective of the sale consideration, attract TDS under the provisions of Section 195 of Income Tax Act. The TDS rates prescribed by the Government of India for payment to an NRI for acquisition of their property, which is held by the seller for more than 2 years, come under the purview of long-term capital gains. So what are these rates exactly after the budget of 2024? As you can see on the screen, before budget 2024, these were the rates which were between the range of 20% to 28%. But now after the new budget, this is the updated table. In the Finance Bill 2024, the TDS rates on sale of properties in India by an NRI have been changed in respect of the properties transferred on or after 23rd of July 2024. Here are a few important things to keep in mind if you are an NRI selling their property. First is to make sure that the buyer should deduct TDS on the entire sale consideration as per the above prescribed rates. You can also try to lower your TDS or get a Nil TDS certificate issued by the Income Tax Department and ask your buyer to deduct the TDS accordingly. To know how to apply for lower TDS, please watch this video. Once this is done, the buyer has to apply for a TAN, which is tax deduction account number, and get a TAN in his or her name. Once the TAN is obtained, the buyer is required to deduct the TDS on every occasion of making payment to the NRI seller and deposit the TDS amount with the Income Tax Department through an e-challan latest by the 7th day of the next month in which the payment is made to the seller. After depositing the TDS, the buyer shall file a TDS return in the next quarter. Once the TDS return is filed, they shall be able to download Form 16A and then hand it over to the seller that you have paid the right TDS. Now, what happens if the buyer does not deduct TDS? I've seen many times NRI property sellers don't disclose their tax residency status to the buyer and completes the property transaction as a resident Indian. Now, this is illegal and can have adverse ramifications for the buyers. As discussed above, it is the legal responsibility of the buyer to deduct and deposit the TDS, but not doing so can impact sellers also. If the buyer fails to do so, they shall be liable for a penalty equal to the amount of the TDS which is not deducted. The buyer shall also be liable to pay interest on the defaulted sum. Hence, the buyer is advised to make sure that the tax residency of the seller is checked before entering into a property transaction. Now, what are the consequences for NRI sellers if the TDS is not deducted? In this case, the seller NRI can't repatriate the funds received by the sale of property outside India. Also in future, if the said transaction comes to the notice of the Income Tax Department, the seller can be prosecuted for misrepresentation of facts of his tax residency. So NRI property sellers ensure these two main things. One, it is advised to hire an expert tax advisor if you are planning to sell your property anywhere in India before entering into any negotiation or agreement with someone who is looking to buy your property. Always declare your tax residency status to the prospective buyer and also follows the tax laws of India. Point 2 is always make sure an application for lower or nil TDS is submitted to the Income Tax Department. In this scenario, the buyer will deduct TDS only to the extent of the TDS prescribed in the certificate, which is good as it will save us amount and we will have liquidity with the same money. I am a certified financial planner specializing in helping NRIs with investments and taxes, so feel free to reach out to me for any help and also share these videos with other NRIs in your network. Thank you and see you until next.